thoughts, sir. We're also getting Dr. Rangarajan in on the conversation. Dr. Rangarajan, thanks much, sir. This is a huge surprise, 4.89%, and actually core inflation coming in at 2.8%. What does this tell you of the trajectory? I mean, do you see inflation getting now to 4% by September?
Well, that's very difficult to predict, but certainly the wholesale price inflation has moved to the comfort zone. And what is really interesting to see is that all the segments, whether it is a primary articles or fuel and power or manufactured products, all of them have shown a tendency to decline. That's a welcome sign. As far as the future is concerned, some adjustments will have to be made on the fuel side, and much will depend upon the monsoon as far as the food inflation is concerned. But whatever we have seen this month is highly reassuring.
But there is still a conundrum for the Reserve Bank, isn't there? While the CPI number has come in lower than estimated and a fairly good 1 percentage point fall in April from March, it is still at 9.4. As well, yesterday's trade deficit numbers were deeply distressing at 17.8 billion. Where does this leave monetary policy?
Well, it is a difficult decision to make at this point, but we can watch and see for one more month to see whether what is happening to inflation. Now, if inflation persists in the direction in which it has been moving, then I think it certainly gives more space to monetary policy. But certainly we really need to now look at why the CPI inflation and WPI inflation are standing at such different levels. Even though the trend has been in the same direction, there has been a decline in CPI inflation also in April. It is way above what we have seen with the WPI inflation. Some analysis will have to be done now to find out why there is such a wide divergence between the wholesale price inflation and the CPI.
Well, isn't it quite clear, sir, that the CPI inflation has a lot of services? I'm only referring to the core CPI and the core WPI. The core CPI is still standing at 8.1%, and there is a large component of services as well as housing in that basket, which is not there in WPI. Wouldn't that be disturbing if that core inflation of services and housing is at 8.1?
The word core inflation has different meanings. Has a different meaning for WPI and CPI.
Yes.
Therefore, the core CPI inflation is not identical with the core WPI inflation.
Yes. Okay.
As you said, yes, the core CPI inflation includes not only what is contained in the core WPI inflation, but also several other services. We really need to understand whether those the prices of those services are increasing at a much faster rate. I think by commodity analysis of what is happening at the WPI level and what is happening at the CPI level is required. So far, one has been seeing the two moving in the same direction. That there was some difference in the levels, but now there is a substantial difference in the level between the WPI and CPI, and which requires a little more examination.
Okay. But until then, you wouldn't expect the Reserve Bank, or you wouldn't say the Reserve Bank can take the CPI, both core and overall level, very lightly, since both of those are still at elevated levels. You would think that they will have to pay a lot of attention to their current levels.
Well, we need to look at a number of indicators. Our CPI inflation is one indicator. But I think we need to wait for one more month for the data to come in, and must take that will clear to some extent the reasons why there is a divergence. But a quick analysis of the reasons for the divergence will help in decision making.
Okay, Dr. Rangarajan, just wanted your thoughts on the revision in the in the month of Feb for WPI inflation all the way to 7.3%, because even January was revised higher to 7.3% as well. So we're pretty much averaging 7.3% on WPI all the way from November to up to Feb now.
Yes, it always happens, but there has been a consistent revision upwards. I have not seen all of them carefully, but the point is that further revisions could happen even to the April number. But the April number is so much down that even after adjustment, perhaps we will still stay in the comfort zone.
Yeah. Okay, and just one more word, Dr. Rangarajan. We didn't get a chance to ask you about the trade deficit figure. There is a view from the economist side that maybe that was just an aberration for the month of April and that the trade deficit will not be as bad going forward. Is that an opinion you share, and your thoughts on the 17.8?
I think we had also projected for the year as a whole a lower current account deficit, certainly as a proportion of GDP. The April numbers include a very substantial increase in the import of gold, which could have happened because of the rush for the import of gold after the sudden drop in the price of gold. That may not get repeated if gold prices continue to remain more or less at this level. Demand might settle down to a lower level. I still believe that the overall current account deficit will moderate as a proportion of GDP in the current year.
Okay, and Dr. Rangarajan, just one more question before we let you go. You know that the breakdown in the core inflation figure is also being read as a demand which is actually breaking down, which might be signaling to weaker growth going forward. What is your thought on the same?
No, I think this is very difficult to interpret it this way. I mean, inflation is the result of both supply and demand factors.
So, but 2.8, Dr. Rangarajan, it's a 2.8% on core inflation. Those are the manufactured products inflation number. Is not that a very serious breakdown of the pricing power of corporates? Wouldn't this be bad news? Because the stock markets are actually, after the core inflation number, reacting negatively. Would this not be a major danger to growth?
No, I think the way to look at it is that yes, the pricing power is coming down. The pricing power may be coming down also because of the fact that there is very substantial imports also. In some sense, the a decline in domestic production in some sectors could be compensated by the increase in imports. Therefore, there is something happening on the supply side as well. Therefore, if as a result of this, there is greater room or space for monetary policy to act, probably it will revive industrial growth as well. But I don't see drawing an immediate inference from this to a decline in growth.
All right, sir. Thank you very much indeed for joining.